If that's constant grief, let's do one thing. Let's move on. We are of course here at the Motilal Oswal conference, and now we have two guests joining us. Rajat Rajgarhia, MD and CEO of Institutional Equities, someone who's actually driving this conference, is with us, and Gautam Duggad, head of research at Motilal Oswal Institutional Equities, is also with us. Nimesh, of course, our foot soldier at the Motilal Oswal conference, is also with us. Good afternoon to all of you, gentlemen. Rajat, I'm tempted to ask you this question. You had a lot of corporates. Which one was the most, interesting? I can imagine, Bajaj Finance would have been the one where there would have been the largest interest. Correct me if I'm wrong.
Well, that's a very difficult question because I loved almost every speaker who came at the conference. But if I have to, if you're still forcing me to pick some of the ones that I attended, I think Mr. Rajiv Bajaj yesterday spoke very well. We learned a lot of things from him. Mr. Aditya Puri had a great insight on how banking has a huge opportunity. We had today Ultratech, which is going on, talking about how we have the best of the growth lying ahead. We had Bajaj Finance, again a very insightful presentation on how to build an institution. Mr. Ajay Piramal spoke about values that create value. Mr. Adi Godrej, who enlightened us about GST, right? So I think almost every speaker was pretty good, and there was something to learn from each one of them, right? I think the common trend was that most of them had a very positive outlook about their own business and about the economy in particular.
That comes to my mind that you had almost 60% of the market cap companies represented at the conference in the last 2 days. Having heard most of them, do you think, Gautam, or maybe you can say, are you looking at upgrading your EPS for FY17 and FY18? Gautam, if you want to share.
So basically, we don't see any universal trend where one needs to upgrade or downgrade the number. It's going to be very stock specific. The trends which are coming out are very mixed. Some sectors are seeing a revival. Some sectors will take a couple of more quarters to see the revival. We of course had a good monsoon. It is still progressing. We've had some of the reforms which have been passed, GST, and we have a stimulus which is coming up from 7th Pay Commission, one rank, one pension. So all of this will result in some sort of upgrade in the second half. Right now, as we speak to the corporate, most of them are saying that trends are looking positive, but it will get reflected in the numbers probably in the second half, and then it will get further cemented in FY18.
Gautam, we track the consumer space very closely. So if there is going to be a big boost in terms of 7th Pay Commission, and there are a lot of expectations of the consumer space doing well, within that, whether it's going to be autos or FMCG, which space is going to likely benefit the most? And in that, if you have any topics to talk to us.
So basically, because of the 7th Pay Commission, we see more impact coming on the discretionary side rather than on the staple side. So one of the sectors you pointed out, auto. Couple of sectors I will add to that. Paints is looking very interesting. We have adhesives, which is a second derivative of the 7th Pay Commission impact you will see as the construction activity picks up. Then you have the whole white goods space, which should see good pickup. So quite a mix of sectors where you will see benefits coming out of the stimulus more on the urban side.
Rajat, last year I came here for the Motilal Oswal conference. I did closing bell from here. The market had hit a 52-week low, and the mood here was quite somber. As we speak to you today, the market has just hit a 52-week high, and all of a sudden you can see the change in mood. My next conference, do you see another 1,000, 2,000 points being added to the Nifty? We were at 7,600 when we came for your conference last time here, and we are at 8,800 today, almost there.
I think I hope we are at a 52-week low today from a 12-month forward point of view, right? Because
that's a big statement.
Yeah, because I think I'm not just trying to be over optimistic, but I think that if you have the next 5 years earnings growth better than the last 5 years, if you have an interest rate differential which is as high as you are seeing in India versus the rest of the world, and if you have a government and RBI both working in tandem to create significant reforms, I would really get surprised if you lose money from here. And that's why I think, broader market view is important, right? India has really been a classic bottom-up stock picking. Pick the right stocks. If market does well, they will do even better for you.
Okay, if market pick up the right stock, and that's really been the thesis in this market. Bottom up has worked, though the Nifty is also at 52-week high. Yeah. But what's the next leader for this market? Do you think it remains with the private banks, the leadership for this market, or do you think IT, which has started to bounce back from 52-week low, that could also do its bit?
Crystal ball gazing is always a very difficult game. Specific to IT, I will say that the growth rates on a trend basis have come off. IT sector used to be growing at 14-15%. That band has now shifted to 9 to 12%, and that is where we have seen the PE ratios also correcting or moderating. As far as our estimates are concerned, we are not building in any recovery right now, at least not in FY17, and that is what we have heard from several corporates who have attended the conference, and also on the Infosys Analyst Day, which just happened last week. So we are not seeing any big recovery in the earnings on IT. On the contrary, as we speak, we are still seeing earnings getting downgraded in that sector. From a private banks as well as NBFC space, and couple of sectors that I will add to that, auto, cement, those are the sectors where we have seen earnings momentum continuing pretty strong, and depending on the base effect as we progress into the second half, you will see some of the beaten down sectors as far as earnings are concerned, be it metals, be it telecom, utilities, PSU bank, they will benefit from the base effect going forward, at least from the second half point of view.
Rajat, I believe more than 100 offshore fund managers have come this time, and I was told by some of your colleagues that some of the newer funds who've been looking at India for the first time have also come at your conference. What's been the general mood within the FI community? Are they still seeing India as the best emerging market country in that basket, or you think they are turning a little cautious now as far as valuations are concerned?
Well, I think for every one investor who is turning cautious, you have one new investor who is turning positive on India, and that has been the story of this market, right? While India may look like an overweight in the emerging market space, if the growth rates of India are at a significant divergence versus the rest of the world, I think that strictly comparing just PE of India with the rest of the world may not make sense. As you cannot compare strictly a Bajaj Finance PE with a PSU bank PE, right? You cannot compare just a high growth economy like India with some economy which is not growing at all. So I think that is what we are learning from investors who have come from overseas now.
Okay, so Rajat, you said you hope that on a rolling 52-week basis we are actually at the start of something big today. Do you have any numbers in mind for over the next 2 or 3 years? If we are at the early stages of a bull market, where can this bull market now lead us? Sorry, I just missed. So, do you have any targets for next 2 or 3 years in terms of where the Sensex or the Nifty could go from here?
Look, we really don't focus so much on the top-down markets, right? But we think there are enough stocks in this market which can keep compounding at 25% both within Nifty and outside Nifty, and which is where you are going to make money. But I think to simplify the answer, the earnings growth expectation should be about 18 to 20% broader market, right? And fair to say market return should closely track that.
Gautam, at the conference itself, there is a very large, representation from the financials, whether it's the banks, the private sector banks, or the new age bank. You had a big discussion on the new age banks as well. Largely within the financials, what is your take? And you think, from an NBFC point of view, the valuations are quite stressed?
Yeah, see, valuations, if you look at it from a 1 year forward perspective, it always looks straight for quality companies. So there is no surprise on that. But some of these companies are going to grow for multiple years. I mean, we had a very interesting presentation yesterday from Mr. Aditya Puri. We had a very good panel. Today morning, Mr. Amitabh Chaudhary of HDFC Life also presented and expanded on the whole opportunity in the life insurance space. So I think while near-term valuations do look expensive, but wherever there is a very strong earnings growth visibility, you will continue to see those valuations sustain. And therefore, the spaces which have been doing well, they will continue to do well. Whereas spaces where we have seen trouble, basically PSU banks, some of the other sectors, there, as long as people do not see a sustained recovery in earnings, probably those spaces will continue to look relatively cheaper, but still money will be made on the quality side.
So any space which is looking attractive, whether there is a potential growth, growth is going to come, and the valuations is still not very expensive. Any pocket which is still where investors can look to buy?
Actually, as Anush said, we are at 52-week high, yes. And therefore, what does that mean? That means that wherever we are seeing strong growth, valuations are not cheap, and wherever the valuations are cheap, you are not finding the growth visibility, and that's the construct that we have today about the market, and I think that will sustain. So therefore, Of course, within the spaces, if you hunt deeper, you will find always bottom of some opportunities where you will find a disconnect between the valuations and earnings growth. But from a very broader perspective, I don't see any sector where you have a strong growth visibility and still sustaining at low valuations. That's very difficult to find in today's market.
All right, Gautam, thank you so much for joining us for the conference, and Rajat, to you as well, and congratulations on a hugely successful conference. We can see from the participants that, and from the crowd that it's been a hugely successful one, and it continues tomorrow, of course, as well. Thank you so much.
Thank you.
So that's the Motilal Oswal team. By the way, the market is still at the high point of the day. And